Okay. Patrick, welcome back. Thank you, team.
Cheers, guys.
And Rio Keo, nice call on Euro on the pop on the news. I want you join the community and help traders out with your skills. Okay, get into the chat room with everyone. So Patrick, great to have you. How are you, bro?
Hi, Dale. Yeah,
yeah.
What a day to catch up, right? Like everything's melting.
Yeah, all one market. Everything melts. Everything goes up together, down together, just a matter of degrees. And look, I didn't think the dollar would get here, and I also thought that we had put in a significant low in the silver at 2040, and did okay on the way up, but disappointed with the action. Are you going to share the screen?
Yeah.
I think we're going to talk about some currency charts or anything you have to show. Patrick, you could follow him at Bad Charts 1. He's with Kevin, and they're a dynamic team and some pretty creative things. So we're going to start off with Canada here.
Yeah. Well, okay.
Oh, the US stuff. Yeah, that's Canada. Okay.
Yeah. So what we got to look at is, honestly, what I'm looking for is these monthly chart, guys, and wait for the wick. I want to see this. This was a US dollar. You see these, I call these the twin towers. So these were meaningful tops, but you could only see these type of capitulation wicks while this is on the upside. So exhaustion, melt up. You could only see them after a certain amount of days have passed by, right? So once you get
rearview mirror. Yeah.
This, I call these the twin towers. And for me, this was super, super, super meaningful. And even here for the, like, it depends right here, you could even call that a back test. So the way I see these trend line breaks is the first one, let's say you're going in an uptrend. Well, I'll get to what's happening today. So let's say you go in an uptrend, then it goes and melts up. You think, it's going to the moon. But eventually there's a steep angle, which is called the sleep mode line. When after you get like, this is my sleep mode line, here's the capitulation wick. Once you close below that, sure, it could go back up, and it often does, right? It's what I call like the echo bubble. But if it can't regain the previous highs, that means the momentum is starting to slow down. And I think some of your guys might call this like Gann fans or Fibonacci fans. It's the same type of concept. I just draw them by hand. But here's another one. So you see it broke down convincingly. The price goes up, but it's just backtesting, can't regain those previous highs. And what it does, eventually over time, it just melts. And even when it rises, this is still weakness. So it's rising up, but you're in a less and less steep angle of ascent, right? You don't have the same drive you had when you went crazy up. And here's the final capitulation wick. I just noticed this line, perfect touch, and then down it goes. But look, that's why you got to stay positive on the CAD versus the US dollar, because it's not doing new highs. It's
every other currency has. That's the point I was going to make, is that most other currencies, Patrick, if they were priced US dollar, like the yen and everything, has taken out those highs. COVID, that was a COVID high there at your second tower. And as strong as the dollar's been, Canada's not up there.
No. And
you know what I mean?
Yeah. And this chart is exactly the gold to silver ratio. So if I add the XAU USD, and everything's financialized, guys. So you gotta, it's like, I'm starting to categorize like types of charts. There's not that many long-term patterns that look different, honestly. If you zoom out,
it's all one market.
Yeah.
I've never seen this before.
And this is the, okay.
Well, maybe I have, and I forgot.
Whoops. Move that to move to pane below.
Okay.
And this is kind of eerie also. This is a type of pattern you could see in the momentum. So right here, I have the distance from the 3-year moving average for the USD versus CAD pair.
Yeah.
And its momentum is tracked by the gold to silver ratio. So you see it right here. This is the gold silver ratio overlaid with the momentum of the And then you could see that when the momentum of the CAD, you see it's still going down here. So, ooh, so I'm wondering what's going to happen right here. Here maybe is another.
Yeah. 95 in the gold silver ratio, maybe
I just
100.
want to. Okay, here it is. So I'm going to put them back together. And this is essentially the USD CAD pair or the gold silver ratio. So silver for the gold silver ratio to go up. Look, the gold silver ratio is highly inversely or negatively correlated to silver price. So it's silver price driving mostly the gold silver ratio. So when the market thinks there's a risk off, something severe is going to happen. Here's a GFC crisis. The gold silver ratio gets sold off. The CAD gets sold off, and they track pretty much each one. So what I'm looking at is I want to see a monthly wick until there's a monthly wick. And you know what could happen? Like even above this line here, it could go really crazy up here. And then we're going to hit a wick. The seller is going to come in and say, look, this is exaggerated. They're going to start pricing in the rate hike cuts. And then after that, oh, look here, there's some type of pivot line right here. Support, turn resistance, support, breakdown, resistance, above, support, up, support, below. So this is important resistance right here. So really, we got to wait until the end of the month. Let that wick come in. If we have a crazy wick up here, Dale, and it closes back below 1.30, that's an opportunity to probably go short or go long the Canadian dollar. And especially if we get, I'm going to put a candle. Look, the candle charts, I like line charts to remove the noise, but candle charts, those wicks, they really give you clues on. And even here, look, it's super scary. This, whenever this starts crescendoing up, we're vulnerable for these huge, crazy spike up where you think it's the end of the world, right? And we're vulnerable to that. And guys, if you want to know, if you're on the sidelines and this is my go timeline until this line right here is closed below, stay clear. Stay clear. There's absolutely no reason to, you see this unwind here of the gold silver ratio?
Yeah.
That was a clue to start going, okay, the market decided there's no market liquidity event. Gold silver ratio goes down. The VIX goes down. I could overlay the VIX. The US dollar gets sold off, right? See the US dollar goes down. It fuels everything. But out of the gates, it will fuel silver and gold way more than US equities. But over time, after the initial move up in gold silver, then when, let's say they realize that the economy is going to do fine and all that, then after that, that's when the US equities take over and it's in their favor. But look at this.
So, you know, and it's unconventional because a lot of people thought gold and silver would do well during risk off in equities, would be a flight to safety, you know, that the dollar would come under pressure. And it really has been, you know, just and bonds went down. Everything went down. So you talked about, I want to explain to our audience what you mean by every market's been financialized.
Well, all these charts, look, I'll do it live. It's all these charts, they track the SPX, let's say the SPX to gold ratio. I'm going to zoom out, reset chart.
Yeah.
Remove indicators. Just pop that up, remove drawings.
How many hours a day do you spend on your charts, Patrick? I'm just curious. Get a ballpark, you know, approximately.
I don't know, 8, 10, 12. I think I dream my
20.
subconscious because it's hard to calculate. Like I'm not always in front of the screen, like spend time with the kids and all that, of course, but it's like my brain is wired to like,
yeah,
you start seeing
art.
These patterns.
It's art to you, isn't it? Art.
It's art.
More than science.
Well, it's psychology. So I don't know where you would put this, but this is a study in human psychology. And if you understand that, you're ahead of the look at that. This is the gold behind is the SPX. I'll put on the log chart because that thing has moved. and I'll put silver on the log chart. Look at that. Behind is the gold divided by SPX. So essentially when you see a ratio chart is which one is outperforming the other, right? And you could also see it as capital flows. If one's outperforming the other, that means the capital flows, which are, let's say it's the money supply, that means they're going more in gold or at a higher rate in gold than SPX on the way up and on the way down. And that's all silver needs. It's the gateway. So until gold breaks out versus the SPX, something like this here.
I think I saw your video where you showed it would be in a pullback mode where stocks would outperform silver for a while. And you thought one more pullback and then that could be it. Did I interpret that video correctly?
No, that's correct. So right now I had it, I think it was on the 4-hour chart. So right now, I think this is going to go down a little bit.
Yeah.
And then after that, once we get like a 2018, because I'll zoom in. But that's why, guys, silver, don't even worry about it. Just don't even look at the silver chart if you don't want to, because gold's going to break out first and it's going to start breaking out versus. So right here's, look, this is 2018. Okay, I'll show you something special, guys. We all know that gold broke out in June of 2019. So right here, I'm zooming in. Look where it was versus SPX. It was on the way up. And that's when it broke, had a monthly close above 1350, above 1400, and it broke out of that base.
Yeah.
It was right here. It hadn't even broken out. So just that move of gold catching up to the SPX performance-wise, it created that huge move. And then after that, it went down, went all the way back up here. And that's what created that move to over 2000. So what's possible right now is I always look for fractals, and this is a great tool. I could even take that. Doesn't mean it's going to happen this way. Oh, why is it doing that? Is it because I'm the log chart? Oh boy.
People are saying you're a mad scientist here in the room, Patrick. I'm kidding you.
Well,
they're going, wow, this guy's way over my head. Look, Patrick and Kevin live and breathe this stuff. All right.
Yeah.
Even their tablecloths are charts. All right. They spread it out with ratio charts and eat steak on top of it. So
something like that. And so it's gonna, because we always expect when it goes up, you get your emotions go up and you think, oh, this is it. And even I fall in that category. We're humans, right? You think that's the time, but the market's always going to do one more bounce. It's going to do one more thing that's going to wear you out. And you went all in early, and that's just the way it works.
You know, Patrick, what two things that traders should never do? And, you know, most people will say, oh, well, don't trade without a stop or don't use too much leverage. I say they should never do cartwheels and never go fetal. How about that? Or you're not a trader. And if you're getting elated on winning trades, you're going to go fetal on losers. It's just another trade. Just kidding. I just chewed off on my fingernails. But anyway, that's what they should not do.
And it could go down here.
Yeah, that's what you were showing.
Yeah. And if this happens, guys, I'll show you the gold chart. And I know maybe here's the gold chart. And this, I know a lot of people are looking at this as being a 2013 top. Guys, the evidence, this topping pattern does look like it, but just like the gold to SPX ratio here, guys, was way higher than it is here. We're rock bottom right now. But what I think more is happening is this. This was in 2018. Let me draw it here.
Oh yeah, you have a video out now to debunk the 900 target, which makes the last couple of years. I bet you're surprised. I see your stuff, but you shouldn't be. That the last high we had at 2070 was a B wave, and we could have a C wave down to 900.
Well, I understand these wave counts, but it's like it's not taking care. That means it's disregarding an 8-year base, a 7-year base. How could you discard that? There's a reason gold broke out in June of 2019 out of this massive base. This is a massive wall right here. So it's kind of tough to think that you're just going to go through that through butter. And I went through a whole bunch of examples over time. I haven't found an example where you're, especially when you're in a depreciating
Do you
fiat
have
tourism.
anything at 1600 to 1560? Because that's kind of middle of the road of the extreme bears, and nothing
Here,
there.
yeah.
Nothing at 1500, all the way back to 1350. You think that's possible?
Well, here's a wall. So previous support turn resistance. So this is a critical wall also here, right? So here's a
Okay, so
1560. It is
yeah.
there. And there is a reverse symmetry move from here to here. So I got to be fair. When you break my sleep mode line, just like this one here, you have a vacuum right here, especially if we close below 1700, then you have a huge vacuum. Well, you have a vacuum like $200 down here, no problem. That's probably going to happen. So if this happens, we're in a GFC type of event here. But you got to expect maybe a wick here, Dale, below here, a crazy wick. People think it's the end of the world, but then the buyers come in, they close up here above 1560, and that's probably going to be the last greatest chance ever to getting gold. Like, because look at March Madness, Dale. Look at that. When the markets were at their worst, when it was the end of the world, if you would have taken a step back, it closed practically at the entry.
Yeah.
So
yeah,
it's gonna, and this is the way I phrase it. The most bullish looking candles, or bearish, like these wicks, they at one time during the month, intra-month, they were crazy Marubozu candles that were filled up to the brink, right? And before the end of the month, they got sold into.
Yeah.
Same thing on the way down. Look, gold was all the way down here. So when gold in March Madness and this candle here, sometime during the month, it was at 1450. People were probably looking all the way down here. Probably it was below maybe some rising trend lines.
Yeah.
People were saying it's the end of the world. But if you look at even here, like there's this great tool, guys, here. If you put the replay tool, you could erase. Look, let's say I put myself back in, look, I'm in March Madness during the month. I'll even do you one better. I'm gonna take here. So now I'm gonna play my replay tool. Here it's going. Okay, here's the consolidation. It's gonna March Madness. No, it's still going up. It's going up. It's going up. It's playing out. Oh, you think you're there you go. That was March Madness. Ah, I missed it. That's crazy. It went all the way down here, and that was intra-month. You're even on the daily chart, the weekly chart, you probably had some closes below a rising trend line.
Right.
So you gotta, my best advice is at least monthly candle charts, stay clear of the noise and wait for those capitulation moments where, especially above, if we close back above a wall, previous support and resistance, you see right here, refuse to close a month after, like there's another example. There's so many. This month here in January of 2020, it closed above a wall convincingly. So it's like not convincingly, just a small wick. And this wall is that's the equivalent for silver's $28, $29 previous support, important support, right? Once you broke below, that became important resistance. Gold here gave you another signal that wall was dead. It became support. And that's what helped it during March Madness. Even if it seeped through on the smaller time frames, by the end of the month, gold knew there was a higher probability that this was a floor, that 1560. So yeah, man, maybe 1560 is the low watermark there for a long time.
All right, you have just a quick look at silver. I know some people are talking, wow, real low numbers, but I also know people thinking 1760.
It's but silver, what it's been telling you, because it refused to do new high, it's been telling you that this was possible here. Okay, this is the chart. Look, I have a all nice chart all queued up.
Yeah.
These are the recessions, the US recessions overlaid to the silver price. I have the 8-year moving average. Even here, you see the recession, silver refusing to do a new high. And I know recessions often, they declare them in hindsight, right? And they adapt numbers. You know, sometimes they think it's positive GDP and years later, or they say, oh, finally, we were already in a recession. Australian dollar not able to do a new high versus the US dollar was a clue. Silver here not being able to do a new high here was a clue that we were heading.
You think Aussie's near a low now?
Well,
and before you leave this chart, I know you have to go. Where's that 8-year moving average coming in?
Yes, now 1840, Dale. Nice observation. So look here, it did a perfect bounce in the GFC here. So what could happen is we could have a wick below this and close above that critical 8-year moving average. And it's pretty solid because you see it served as a beautiful pivot line here, and you notice I'm like, there's the 8-year cycles in gold and silver. So you try to match the MA to the cycle length. You see here, perfect test. You see here how it reacted on both sides. Here, breakout. Look, this is meaningful again. I don't think silver broke out in July of 2020 for no reason. I don't think gold broke out in June of 2019 for no reason. And this is support.
A retest.
Yeah, it's a retest. So you gotta, sure, intraday you could have a flush down, but as soon as you get that wick,
darkness of the abyss.
yeah, is that what I wrote?
Is where you look for silver and give it a kiss.
And and silver will tell you when the recession, the bulk of the recession is done, because halfway through, that's when the recovery, I call silver a recovery metal. Once it realizes that the recession is almost over because of whatever the Fed's going to do, loosening or whatnots, I'll start pricing in the recovery way ahead of US equities. And it's just going to explode upwards there.
Okay. Well, gosh, thanks, Patrick. I know you brought up, we're already talking again. It's so amazing how 3-4 months fly by. And, you know, look, you're one of the hardest working technicians I know, you and Kevin. And people that want to follow you, best place is at Bad Charts 1. You want to show your website?
Yeah.
Before I go.
So, guys, yeah, we have been Kevin there, and we have like a yearly 60% off yearly subscription. So use discount code PREPARE. And this is the website. We have, there's a whole bunch of stuff I don't post on Twitter. Twitter is like the macro stuff, but there's like this one I posted for about, even when oil was going back up, I had, this was like last week. And now where's oil today? It's back on this support line, I think, right, Dale? 95 today?
Yeah, it's taking it out. Testing
and
it,
look, it was simply a back test of this topping pattern. And yeah, I could have went back up.
68, measure 68 you have down there.
Well, I
On a
did that
breakdown.
one, but I updated for the, that was the worst case, but I did another chart for our members. And I think here there's a wall at 85. So when that's why guys don't look too close to the steering wheel, because there's support and resistance further back and it could stop at 85.
Yeah, look left, guys.
Look left. Right. That's a good say. I should say that.
Yeah, look left,
guys.
man. That's a market's memory.
And
so, I'll remember this interview for at least, you know, with my memory, at least a few weeks. So Patrick, I love you, bro. Thank you so much. You know, we've been doing this long enough that you're not just a guest, you're a friend. So say hi to Kevin for me, and good luck, good hunting the rest of the summer. And we'll be talking again in the fall, my friend.
Thanks, Dale. And yeah, we'll try to get you back on our show there. It'd be fun to ask you a few questions, to be on the other side of the mic. That'd be cool.
You know me, I have ADD. You know what that is, right? Attention deficit disorder.
For real?
Because I can never get enough attention. Anyway, so that's my definition of it. Anyway, thank you so much, bro.
All right, man. Take care,
Good
guys.
luck, and I appreciate your time and your hard work and your imaginative technical work. Okay.
All right, Dale.
All right, so that's a wrap, everyone. You could join the team in 20 minutes on the Morning Edge. Remember, don't just count your pips, count your blessings. We'll see everyone tomorrow to wrap it up. I'm going to have Peter Goodburn with us tomorrow. Adios. Thanks again, Patrick. You're very welcome, Mary, Hugo, Ingmar, all you guys. People enjoyed it, Patrick.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.